Don't forget to like, subscribe and share the videos.
And then a long pause. The news is RBI has recently, during its monetary policy committee's decision, has passed the policy rate. It does not change the previously fixed repo rate because of the uncertainty that has been prevailing in the inflation. Why? Because even though the inflation for the August month has reduced when compared to the July month, it's the inflation rate is well above the expected limit of 2 to 6%. And then there has been uncertainty in the inflation. Why? Because of the lesser production of pulses and suboptimal level of rainfall, and then the El Nino impact which is going to impact in the near future, and these are all the things which keeps the inflation in the uncertainty in the near future. How the news is related to examination is, under prelims the news is related to economic as well as social development. Similarly, under mains it is related to Indian economy and issues relating to planning, mobilization of resource, growth, development and employment, which comes under GS paper 3, economic development. Okay, let's have a look into the Monetary Policy Committee. It has been created by central government under 45 ZB of the RBI Act 1934, which was amended to give power to the central government to create the Monetary Policy Committee. And then central government was constituted 6-member body, and whose decision is binding on the banks. And then RBI governor is the ex officio chairperson for the committee. It contains 3 members from central government as well as 3 representatives from the RBI. And the decision is based on the voting only, and the RBI governor will be having the casting vote. And then what is the instrument does the monetary policy have to control the inflation in India is, first and foremost, is the repo rate, the rate at which the RBI lends to the bank. It will be based on the prevailing inflation situation as well as the liquidity situation across the country. Secondly, reverse repo rate, interest rate at which the RBI borrows from the bank to suck the excess liquidity that has been prevailing in the market, so that the inflation could be reduced by changing the rate. The inflation could be controlled. And then standing deposit facility, it is the facility where RBI accepts the non-collateral deposit on overnight basis from the liquid adjustment facility participant, that is those banks who are participant in repo as well as reverse repo rates. These both are combinedly called as LAF, that is liquid adjustment facility. Fourthly, marginal standing facility. It is the rate at which banks can borrow on an overnight basis from the Reserve Bank. And then CRR, SLR is first cash reserve ratio is the certain percentage of net time as well as demand liabilities needed to be maintained by bank with RBI. For this, bank will not be earning any interest, but for statutory liquidity ratio, certain percentage of net time demand liabilities needed to be maintained by bank within their bank itself, in the form of gold, security, cash, etc. And SLR gives an opportunity to earn interest for the bank. And then open market operation, based upon the prevailing condition of inflation as well as the prevailing condition of the liquidity across the system, the open market operation will be conducted accordingly to suck out the excess liquidity in the case of higher inflation, or to release excess liquidity in the case of lower inflation. For this, open market operation will be conducted. So this is what the details related to monetary policy committee is about, and the tools which is being used by monetary policy to control the inflation is about. What need to be studied further is, we should study what is inflation, what is the different types of inflation, and what impacts does the inflation creates on different aspect of the people in the economy. Secondly, we should also know about the El Nino phenomenon. Thirdly, we should also know about what is fiscal policy is, and what are all the important constituent of fiscal policies. So this is what the analysis in relation to the news.